And welcome to Moneycontrol. You have tuned into IPO Watch. I'm your host, Nikki Michandani. In the first IPO by the JSW Group in almost 13 years, JSW Infra has launched its 2,800 crore initial public offering on September 25th. That is, it's open for subscription today. Now, the IPO is entirely a book-built issue worth around 2,800 crore, where the promoters will not sell their shares. Ahead of the IPO, the company has already secured in 1,260 crore from both foreign as well as domestic investors in an anchor round. Apart from top-notch fund houses, prominent domestic investors, including the like of Shamak Investments, which is the Enam Group firm led by Akash Bansali, Premji Investments, Madhukela-led MK Ventures, Sunil Singhania-led Apiece. These are some of the names out there which are featuring in the list of the anchor book. The company has fixed a price band of around 113 per 119 per share. That's the band, and the investors can bid in a multiple of a minimum of 126 shares in one lot. That's for retail category, and the separate amount of category also goes for the HNI investors out there. So minimum holding along with, let's look at the JSW Infrastructure allocation, where the retail category gets a minimum of around 15,000. Maximum that they can go is to an extent of 1,94,922. Similarly, also is the case for HNI category, where you have the minimum and the maximum right up there on the screen for you. In terms of, let's also talk about what we have in terms of the important dates, right? The IPO opens for subscription on September 25th, that is Saturday, and it closes on September 27th. The shares are expected to be listed on October 6th for this one. Also, let's talk about the objective of the issue. How does the company, which is coming out, rather the group, which is coming out of 13 years, intend to utilize the proceeds after going public? Now, it's going to be divided into three parts, where JSW Infra essentially is going to be repaying in certain outstanding borrowings through an investment in the wholly owned subsidiary. The first subsidiary is JSW Dharamtar Port, and the second one is Jaigarh. Now, it's also going to be financing in the capex requirement through investment again in the subsidiary, which is Jaigarh Port, which in turn will be utilizing that for expansion and upgradation work at the port itself, be it in terms of the expansion of LPG terminal, be it in terms of setting up an electric substation, or be it in terms of purchase and installation of dredger. Along with that, it's also going to be financing in the capex requirement via investment in another subsidiary, which is JSW Mangalore Container Terminal for expansion. Now, let's understand more about the company. What is this company all about? It is a part A of the JSW Group and stands as the second largest commercial port operator in India in terms of cargo handling capacity for the financial year FY 2022. Now, the company handles diverse cargo types, including dry, bulk, break, liquid, and gases, along with other category. Now, this array includes also commodities that it handles in the likes of thermal coal, iron ore, sugar, steel, molasses, and more. Now, the company has presence across India with non-major ports located in Maharashtra and port terminals, which are essentially located at major ports across the industrial region of Goa and Karnataka on the west coast, and Odisha and Tamil Nadu on the east coast. Let's also talk about the financial performance of the company. How is that stacked up? Well, if you talk about the total income, EBITDA, and the PAT, all of them have grown at a consistent CAGR of 41%, 42%, and 63% respectively for total income, PAT, and EBITDA category. That is for the period of FY 21 to 23 that we've seen that amount of significant CAGR growth. Also, in terms of the debt profile of the company, how is that stacked up? The company's net debt to operating EBITDA has come down from 4.4 times in FY 21 to 1.37 times in FY 23. In terms of ratio, both ROCEs and ROEs have improved. ROEs has improved essentially from 9.2% in FY 21 to 18.3%, and ROC has improved from 8.15 to 19.5% in FY 23. Look at the significant amount of improvement that is essentially coming from ROCE. Let's also talk about the risk profile. Let's also talk about the strength. Let's talk about the strength part first. First is that it's the fastest growing port related infra company and the second largest commercial port operator in India. Now, that's that in terms of what we have as a commercial port operator in India in terms of cargo handling capacity. The company is well positioned to benefit from growth in the country's trade as well as logistics sector given the kind of RHP. It also has mentioned in the RHP that it has an installed cargo handling capacity right now of 158 MTPA as of June 30, 2023 and a CAGR growth of around 15.27% in capacity from March 2021 period to 2023 period. Strategically, it also has the assets, which is the second positive coming in or the advantage coming in for the company. It's got located assets at close proximity of JSW Group, customers and industrial clusters which are supported by multi-modal evacuation infrastructure. Experience management. I'm sure most of you will know that the company is backed by the experience management, which is led by Mr. Sajjan Jindal and the family trust, who are the promoters of the company. Let's also talk about the allocation of funds, where the fund has been essentially it's growth oriented. It's going to be using it for strategic purposes, including the prepayment, repayment of debt, capex, which is going to be used in for expansion and upgradation of the projects. Now let's address in risks, and there are a couple of them here, where the company A relies on concession and the license agreement from the government and quasi government organization. Any breach that could happen in terms of this can lead to termination and also can severely impact the financial and the operational profile of the company. Also, do bear in mind the fact that 60% of the total volume handled comprises of coal and iron ore. A significant reduction or the elimination of such cargo category could also adversely affect the financial profile of the company. 63% of the business comes from the group itself, JSW Group and the customers. Any default or decline in demand could impact the business. Fourth is certain subsidiaries in the past of JSW Infra, they continue to report losses even for the financial year FY 2023. When they're going to turn around, where there's going to be a clarity emerging out of this, that remains to be watched out for. Apart from that, substantial amount of related party transaction too could be an added risk on this one, given the kind of dealing that he has with the company has with the JSW Group. Also, the company doesn't own the JSW trademark. It pays a royalty fee of around 0.25% of its overall turnover for the trademark name and logo. And if you talk about the peer group comparison, how is JSW Infra stacked up as compared to that of its peers like Adani Ports, Gujarat Power? The details are just there on the screen. It has recorded a better operating matrix versus peers, be it in terms of just the PAT, ROEs, and if you talk about just the valuation, at this point of time, they seem to be reasonable as compared to that of Adani Ports and a little bit on the higher side as compared to the Gujarat Power. But overall, as per industry standards, it seems to be like a reasonable ask. Well, with this, it's a wrap. Thank you so much for tuning in.